This is Global Currency Insight, and tonight we're diving into one of the most talked about developments in the currency world. The buzz right now centers on claims that the long-awaited revaluation of the Iraqi dinar could officially launch this very evening. According to the latest updates being shared within the community, there's news that not only could the revaluation go live soon, but there may also be something called a contract rate, available only through specific redemption centers rather than at normal banks. That detail has sparked intense interest because the suggestion is that this alternative rate could be considerably higher than the standard exchange numbers many were expecting. The very idea has left dinar holders wondering whether tonight might be the pivotal turning point they've been waiting years to see. The conversation is heating up, so let's carefully unpack what's being reported and why people are paying close attention. What's attracting so much attention is the claim that these redemption centers, which are said to be special exchange locations separate from typical financial branches, will offer a unique rate that cannot be accessed at a neighborhood bank. This is being described as a carefully structured process designed to handle high volumes of transactions that ordinary institutions wouldn't be prepared for. If accurate, this means that anyone who holds dinar and wants access to that higher figure would need to arrange an appointment at one of these designated centers instead of walking into their local branch. The reasoning behind such a system is that banks, when faced with a sudden rush of customers all trying to exchange at once, could quickly become overwhelmed. Redemption centers are presented as specialized facilities with trained staff, security, and direct channels into larger financial networks to manage everything smoothly. That detail alone is enough to grab attention, because it suggests a very different process than what most people imagine when they think about exchanging currency. Another key element being highlighted is the suggestion that this contract rate is not just a small adjustment above the expected value, but something described as significantly higher, enough that it could alter what many dinar holders believed was possible. While exact figures have not been shared, the language being used implies that the difference could be substantial. What's important to note is that the framing of this idea makes it sound less like a market-driven number and more like a prearranged agreement negotiated at very high levels. That's where the story takes on even greater weight because it points to involvement from top officials both in Iraq and abroad. It's being said that agreements have already been reached between leaders and financial authorities, and that this special rate comes out of those conversations. The implication is that this isn't speculation floating around on the sidelines, but something structured within official channels that could be ready to activate. What makes these claims more intriguing is that the reported agreement is said to involve names at the very top of government and banking. On the Iraqi side, mentions are being made of the country's prime minister along with the head of the central bank. On the international side, there's talk of high-ranking figures from the United States being connected to the process as well. The suggestion is that this level of coordination would not be possible without months or even years of planning and preparation. Currency realignments of this scale do not happen casually. They typically require lengthy negotiations, international understanding, and complex legal and financial steps. That's why, for many listeners, hearing that agreements were allegedly made between officials at such a level gives the story a sense of gravity. It portrays the development not as a rumor, but as something deeply tied into long-term planning. For years, one of the biggest theories surrounding the dinar has been that its potential value would always rise and fall alongside Iraq's oil exports. The belief was that stronger oil revenues would automatically translate into a stronger currency, and weaker prices would hold it back. But what is being said now challenges that assumption. According to the most recent discussion, this contract rate may actually be fixed in a way that doesn't rely on global oil fluctuations. If true, that changes the entire outlook. A fixed or locked-in rate would mean less uncertainty for those watching oil markets daily, and instead more predictability in how the currency is positioned. Oil is famously volatile, with prices moving dramatically in response to political events, supply issues, or market speculation. By disconnecting the currency's value from that volatility, Iraq could present itself as a more stable economic player over time. That stability is exactly what draws so much interest. Now let's take a closer look at these redemption centers. If what's being said is correct, they are not casual locations but specifically designed facilities. Unlike a local bank that handles everyday deposits and withdrawals, these centers would be set up with the sole purpose of managing currency exchanges at large scale. That means heavy security, trained financial staff, and systems capable of processing transactions quickly and accurately. Because they would be managing not just small exchanges but potentially very large amounts of currency, the process would be more structured. Holders would likely need to show identification, documents proving how they acquired their dinar, and complete paperwork during the appointment. This would separate the experience from a standard teller interaction and make it more formal. The centers would also schedule by appointment, ensuring order and preventing long lines or overwhelming demand. The talk about timing is perhaps the most dramatic part of this story. The statement being made is that the revaluation is scheduled to go live tonight. That kind of specificity is unusual because typically discussions about these matters remain vague or uncertain. Suggesting a particular evening indicates that those involved believe systems are ready to update and that everything has been coordinated to minimize disruption. Large financial adjustments like this are often implemented outside of normal trading hours so that when markets reopen, the changes are already reflected across networks. If the reports are accurate, this evening could be the chosen window for the adjustment. However, what going live exactly means remains open to interpretation. It might involve public announcements, updates to international exchange platforms, or simply the opening of appointments at redemption centers. The precise mechanics matter less than the fact that a launch window is being suggested. For people who have held on to Dinar for many years, this kind of announcement represents the possibility of long-awaited confirmation. Many have been watching Iraq's economy develop, monitoring rebuilding efforts, political stability, and trade relations in hopes that all of these would eventually strengthen the currency. Hearing that a new rate could be revealed brings those expectations into focus, but it also comes with practical considerations. If there really is a contract rate available only at redemption centers, those who want access would need to act efficiently. That could mean having their currency organized, locating where redemption centers are, and being ready to schedule appointments. The process may not leave much room for delay if the rate is time-limited or based on appointment availability. So, the conversation has shifted from if a revaluation will happen to how and where people can participate once it does. There's also the international angle to think about. A stronger dinar would have consequences for trade, investment, and Iraq's position in the global economy. If the revaluation goes forward as described, Iraq could suddenly find itself in a very different financial landscape. For example, its exports could become more expensive for other countries to purchase, but the nation itself would also hold more financial weight. That could influence how Iraq negotiates contracts, attracts investors, or builds infrastructure. On the geopolitical side, a major currency change would naturally have ripple effects on how other countries interact with Iraq. These dynamics explain why the story emphasizes the involvement of high-ranking officials on both sides. It portrays the revaluation not as a purely financial event, but as one with political and strategic significance. When it comes to the individual holder, the distinction between a normal rate and a contract rate is key. Being aware of the redemption process and understanding what documents might be required could make a substantial difference in the outcome. Simply owning dinar may not be enough if access to the higher rate is limited to those who follow specific steps. That's why so much of the conversation now revolves around preparation. Holders are encouraged to be organized, informed, and ready because missing the details could mean a different result. The structure of the redemption center process, appointments verification, security, adds weight to this point. It highlights that this isn't an everyday financial activity, but something more controlled and carefully managed, reflecting the seriousness of the overall event. The part of the story that stands out most for long-term observers is the claim that the rate is already locked in. A locked rate would be insulated from market swings, geopolitical tensions, or shifting oil revenues. It would mean that the value had been agreed upon by leaders and financial authorities in advance and was therefore stable. That level of certainty is rare in global finance, where currencies normally fluctuate daily based on countless pressures. A locked arrangement would allow both governments and individuals to plan without fear of sudden reversals. For Iraq, it would represent a bold move toward long-term economic predictability, while for holders, it would provide clarity about what to expect. This kind of stability is often seen as a critical step when nations are rebuilding credibility and trying to attract international partners. The fact that oil is not being tied directly into this reported rate is also meaningful. For decades, Iraq's fortunes have risen and fallen with the price of crude, leaving its economy exposed to sudden shocks. By establishing a stable currency rate independent of oil fluctuations, the country could gain more control over its economic future. Investors and trading partners would no longer need to worry that every shift in global oil prices would undermine Iraq's financial system. It would also give the government more room to plan infrastructure, education, and development projects without constant uncertainty. A predictable currency provides a foundation for long-term policy, something Iraq has often struggled to maintain due to the instability of oil dependence. This makes the reported structure of the contract rate stand out as a potentially transformative approach. Of course, as with any major financial development, the process being described is highly complex. Implementing a revaluation requires coordination across central banks, international financial systems, and governments. Every detail must be carefully synchronized to avoid disruptions or imbalances. That's why hearing that all the moving pieces are in place gives this story its sense of immediacy. For observers, it suggests that years of planning might finally be reaching their conclusion. The mention of an exact time frame tonight heightens that impression. But regardless of timing, the broader message is that a large-scale change could be unfolding, one that would reshape both Iraq's financial future and the experiences of those who have held dinar while waiting for such a moment. For many who follow this topic, the most important thing now is to stay informed and pay attention to how events unfold. A revaluation of this kind is not something that happens quietly or without procedure. It involves formal announcements, structured exchanges, and international recognition. While the details are still emerging, the possibility that a contract rate could soon be available only at redemption centers is enough to change how people are preparing. It underscores the importance of understanding not just the currency itself, but the specific mechanics of how an exchange would work. By focusing on those practical aspects, holders can be better equipped to navigate whatever comes next. As the story continues to develop, what stands out most is the combination of timing, structure, and high-level involvement. Together, those elements paint a picture of a carefully orchestrated process rather than speculation without foundation. Whether or not the revaluation is confirmed tonight, the narrative suggests that preparations have been extensive and detailed. For those watching closely, the key will be how the next steps unfold, whether redemption centers begin scheduling, whether public statements are made, and whether international exchange systems reflect the changes. Until then, the anticipation remains high and the conversation continues across the community. So that's the latest on what is being described as a potentially historic moment for the Iraqi dinar. Reports claim that a revaluation could go live tonight, with a special contract rate offered only at redemption centers. These centers are said to provide higher rates, structured appointments, and secured systems to handle the process. The involvement of top officials and the suggestion of a locked rate independent of oil prices give the story additional weight. As events move forward, the focus will be on how these claims unfold in practice. Stay tuned, because if accurate, this could be one of the most significant shifts in the currency world in recent memory.